Now let us analyze the cost associated with the Hoosier County Road Department. In front of you, you have the basic information associated with the department, and the mission is to maintain the roads in a county. So here you have the example of where they have to maintain 80 miles of gravel road and 185 miles of paved road. And note that the total mileage that they have to maintain is 265 miles. Note that they have expenditures associated with the maintenance in the amount of $41,000 for the gravel roads and $180,000 for the paved roads. You also see the cost per mile of maintenance. So here you just take the 180,000 divided by 185 miles, and you get the cost per mile of maintenance of $973. The department also has full-time equivalent employees or personnel, and they have 4 people for the gravel road and 5 people for the paved road. In total, they have 9 maintenance employees. Now, in this case, or in this example, it is actually the state that is reimbursing the county per mile of road maintained. So here in this case, we have the state reimbursement is $6,250 for gravel roads and $10,200 for paved roads. Okay. Now, of course, you have the cost per mile for the supplies. Okay, you have the reimbursement per mile for the supplies, but you are not only having the supplies that you have to cover, that the $6,250, for example, have to cover, but you also have the personnel cost. Okay, so note that before we get to the personnel cost, you see that you have here the productivity of miles per person per year. So in the sense that you have the, for example, for the gravel road, you have one worker is currently able to repair or to maintain 20 miles. So you get that by taking the 80 divided by the 20. The 80 divided by 4, you get 20 miles. And suppose that the benchmark theoretically should be at 25 miles. And you have the similar concept here for the paved road. Now, for this example, we assume that the maintenance employees, they are earning $74,000, okay, independent of whether they are maintaining gravel or paved roads. And note that you also have here overhead, in the sense that you have the director's salary and the assistant salary that are $96,000 and $61,000, okay? And note that those costs, and we will see this soon, cannot be directly attributed to either the gravel or the paved road, in the sense that we need allocation factors, or we need to develop allocation factors to allocate those two costs to the gravel and the paved road. We also have information about the equipment lease, in the sense of how much does it actually cost to use the supplies and then maintain the roads. So here we have a fixed cost of $6,250 per month for the gravel roads and $9,750 per month for the paved roads. Now, those fixed costs are independent of how many miles are actually repaired. We also have the variable rates per mile. That is $724 for gravel roads and $1,100 for the paved roads. Okay. The equipment is also stored in a maintenance facility, and the cost is here $210,000. Let us use that information to actually calculate how much does it cost to maintain the gravel and the paved roads in the county. Now here you have the information, and some of the information is taken from the basic information, in the sense that you have the miles repaired, 80 and 185, for a total of 265 miles. And then I also have calculated the percentages in terms of miles repaired. And we are going to use those percentages later on in the exercise. We also have the number of employees for the gravel and the paved road. And again, similar to what I have done for the miles repaired, I have also calculated the percentages of the employees of total. So 44.4% are equivalent of 4 divided by 9. So now let us first calculate the direct cost associated with the maintenance of the gravel and the paved road. So first we have the personnel times their salary. So remember that the maintenance employees, that they are earning $74,000 per year. And hence, because since we have 4 of them, we have 4 times $74,000. And that gives us a total of $296,000 for the gravel road. And since we have 5 employees for the paved road, we have a total of $370,000 for the paved roads. Hence, our total salary is $666,000. Okay. Now, we also know that we have the supplies. And note that here the supplies is simply the miles times the rate. But since we already have the total we have the total supplies expenditures, which were $41,180,000. So we can simply take those numbers here. And so the total of supplies is $221,000. So next we have the equipment, and remember that the equipment was actually composed of a fixed rate and a variable rate. So the equipment for the gravel road was $6,250 per month. So here, if I have the 12 times the $6,250, that is for the gravel road, I will get an amount of $75,000 for the gravel road. And for the paved road, the equipment lease was actually $9,750. And hence, if you are doing those multiplications, you are getting $117,000. So the total fixed equipment per year for both the gravel and the paved road is $192,000. Now, there are also associated with the equipment, there are also variable costs, and those variable costs are calculated on a per mile basis. So the variable cost is $725 for the gravel road and $1,100 for the paved road. And hence we have and since 80 miles and 185 miles are repaired, so we take, for example, for the gravel road, we take 80 times the 725. That gives us $58,000. And 185 times the cost times the 1,100 gives us $203,500 for the paved roads. And so here the total would be $261,500. Okay. Now, if you're summing up the cost, you see that, so those are all the direct costs. You see that you are spending $470,000 on the gravel roads. You are spending $870,500 on the paved roads, and the total is $1,340,500. So those are all the total cost, the direct total cost. Now note what you could do is you can actually calculate the direct cost per mile. If you want to do the calculations, you simply take the $470,000 and divide it by the 80. So you would get $5,875 of direct cost per mile for the gravel roads, and $4,705 for the paved roads. Okay, and so now here you can already see that this may be useful information if you're looking at the cost reimbursement from the state per mile, because remember that the state reimbursement per mile is $6,250 for the gravel road and $10,200 for the paved road. Okay, so here you may wonder, well, why do we have so high direct costs for the gravel road? Then note that you actually have a much lower productivity, in the sense that the gravel road, you have 4 employees that are repairing 80 miles, but you have, for the paved roads, you actually have just 1 employee more, but they are repairing considerably more roads. Okay. So now, in the next step, we have to allocate the indirect costs, so from the director, the assistants, and the maintenance facility, to the gravel and the paved road. Now here in this case, I have written personnel and miles in parentheses, and what this means is that the director and the assistant, we are going to allocate those costs based on the percentage of employees, so 44.4 for the gravel and 55.6 for the paved roads. We are doing this for the director and the assistant. And for the maintenance facility, we are going to allocate this based on the miles. Okay. And note that this is just one way of many different ways to actually allocate those costs, right? So we know that the director earns $96,000. So 44.4% of $96,000 is $42,667. And for the paved road, the 55.6% of 96,000 is $53,000, 333. Okay, and of course you should always double check if you add up those numbers. They should add up to $96,000. Okay, if they do not add up to the amount that you are actually spreading over the two centers here, then you obviously made a mistake. We can do the same for the assistant, who earns $61,000, and we are allocating the salary 44.4% to gravel and 55.6% to the paved roads, and then we are getting $27,111 for the gravel road and $33,889 for the paved roads. And again, if you're summing up those values, you should be getting the $61,000. Okay. Then for the maintenance facility, here the $210,000 we are not allocating based on the employees, but we are actually allocating those based on the miles repaired. And the miles repaired is 30.2% for the gravel road and 69.8% for the paved roads. And hence the 30.2% of $210,000 is $63,396 for the gravel road, and the remainder of $146,604 is going to the paved roads. So again, here we have the total of $210,000 for the maintenance facility. And now you see that the total indirect cost allocated to the gravel road and the paved road is $133,174. And for the paved road, it is $233,826. And of course, this sums up to the total indirect cost associated with the director, assistant, and the maintenance facility. Now, if you're summing up the total direct cost with the total indirect cost, then you are getting the total cost. This is for the gravel road, it is $603,000, $603,174, and for the paved road, it is $1,104,326. So the total cost here is a little bit over $1.7 million. Okay. Now you can calculate the total cost divided by the miles repaired. So for gravel you get $7,540, and for the paved road you get $5,969. Okay. So here you now have the cost per mile, where you have allocated not only the direct cost, but you have also allocated the indirect cost to the two centers. Now the total revenue, remember that the state reimburses per mile on a per mile basis. So the reimbursement for gravel roads is $6,250, and since we are repairing 80 miles, the revenue here is exactly $500,000. And 10,200 times the $185 is $1,887,000. Okay. So now, when you are looking at the total cost and the total revenue, you see that the total deficit for the gravel road is actually $103,174. So that is actually a deficit, but you are making a surplus with the paved roads, because the almost $1.9 million is more than the $1.1 million. So here you're making a surplus of $782 and $674. Okay? So in total, your surplus would be $679,500. Okay? So here, this is an example of how you can use cost accounting and cost analysis to look at how much it costs you to maintain the roads in this county.